Hey everybody, and welcome back to my channel. Today I want to talk a little bit more about the foundation of what an FFX strategy is. And in order to do that, I want to help you all demystify on how to read candlesticks. Basically, there's tons of information on YouTube, but I want to really dumb it down into some very, very simple concepts. If you look at the chart on your screens right now, what is it that you notice? Very simple. What do you see? You see a whole bunch of bodies, right? Some are going bullish, some are going bearish, and every one of these bodies has a wick, right? So you can also tell me that you see trending chart right here, trending price. You can see a range-bound price. You can see trending price. You can see some range here, and so on and so forth. And price is being printed on your charts in the form of candlesticks. Now, what do these candlesticks mean? How do we take advantage of it? What do the wicks mean, right? And very simply, here's what I want you to reflect when you're looking at a chart without any indicators and everything. So what I want to present to you is this. So imagine this is, I'm not very good in drawing. Imagine this is a candlestick, a 15-minute, it could be 4 hour, it could be 1 hour, whatever have you. And then there is another one right here, right? And here are the wicks. So the question is this: when you see a trending market, right? So there is a trending market right here. If I zoom this a little bit out, there is a trending market here. And what you notice typically is that when the market is trending, the price is falling and the price is going up, there are always wicks on these bodies. But where the question becomes, where are these wicks reacting from? Why does a wick go somewhere in the middle of this body and then starts and decides to reverse from here? What is going on? And the simple answer is this, that on a larger time frame, there is always a trend built into it on a smaller time frame, right? So this could look like this on a smaller time frame, right? And then once the price starts moving up, maybe this is the point where this candle closes, the price continues to move up, which creates this wick right here. And then price decides to continue falling down and continue the trend. Very simply, this is what you see on a smaller time frame. This is what a trend is, that you have a higher high, lower high, higher high, lower high, and the price continues. Now the question becomes, why is the price reacting here, right, in the middle of this body? What is going on in this area where the price is moving up? Something happens here and the price reacts. And this is the foundation of FFX strategy. And I'm going to give you a couple of examples. Of course, I've cherry-picked them to give you the understanding what I mean. But to give you a visualization of what it looks like, let's back up a little bit. Let me remove all of this. There you go. And here at this point in time, I can't seem to get rid of that. Whoops. Okay. So here is a convincing price that has broken to the downside, right? And this is a session. This is the New York session. This is what I typically trade in London and New York. And what is it that I want to do? Let me look into the next candle. If I move to the next candle, the candle very convincingly tells me that instead of breaking the low of this wick, which is following the downtrend, it is going to the positive side, and it's convincingly closed on the positive side. So at this point in time, here's what I do. I mark this candle, right, as so, and I switch to my lower time frame. And at that point in time, all I'm doing is I'm waiting to get an entry, which is the wick creation, and then get a signal or an entry where I can get myself involved in to run in anticipation of the trend continuation, right? So if I come back to this, what do I anticipate? My anticipation is that on a lower time frame, if this has gone bullish, then the price should continue bullish. So basically, price broke the previous candles or structures high. I'm anticipating a pullback, and then I'm anticipating a push upwards in the direction of the trend. Does that work? Let us see. Right. So what do we see on the 1 minute time frame? Here it is, a little bit more clear. Price is coming down. Price is failing to break the low of this wick, so it is not creating a lower low. This was the last high. Price sort of wicked, came down, did not break the low, and price is now going in the upward direction. This is what I want to play in anticipation that the price will continue. So let's go candle by candle. Price is creating that wick. It has taken this low, right? So there are a couple of things in my strategy that I want to have liquidity taken, right? So this is a strong liquidity that has been taken out. And at this point in time, what can I do? I can simply put a high, break a stop order over here for the long side and cover the low of this. Simple as that. And simple as that. And then we can go to 1 hour, we can go to 2 hours, we can go to 1.5 hour, we can go to whichever direction that you want to, excuse me. So let's say 2 hour, 1.5, whatever you want to, and let's continue, right? So price goes in, and then very quickly you see the trend is continuing in the top direction. If I go back to 15 minutes, what has developed? We've had another candle, of course, which gave us the winner. So let's remove this trade here. Let's recalibrate to this candle right here, 15 minute. And what is it that I'm wanting to do? All I'm wanting to see is there's a pullback and then it is continuation in the direction that I want to trade. If I were to go back to 1 minute time frame, then kind of go step by step. Let's see what happens here. This is a low that I would expect to take because this low broke this side. There's strong liquidity. This low could go before I want to get involved in. I do not get involved in unless there is some form of liquidity that is taken. So price keeps doing what it wants to. It's at this point doing what it wants to. It did break this, right? So what I can do is I can place a stop order at the top of this and then place a low right here. And then in anticipation, I could go to R that it will tag me in with the momentum of the direction that I want to be in. Once I'm tagged in, I'm anticipating that the trend will continue. So let's see. Nope. I could easily move my entry at this point here because the low of this candle broke. The stop loss stays the same. It's protected about 5.7. Let's see. Now I'm already tagged in. And then I am anticipating for price to just continue in the direction that I want to. And it does, right? Very, very simple. All we're doing is we're following a process. There is no randomness into this. There is no gut feeling in this. All I'm doing is very, very simple. I am looking at a candlestick. I'm looking if it is a convincing closure in the direction that I want to trade. I highlight that candle, drop over to 1 minute, and then I look for my entries to give me that sign where I can place a stop order in the for the long or for the short, where the anticipation is that the trend will continue, right? And that is all there is to it. I hope you got some value out of this. Again, there's tons of videos on my channel. Do check them out. But the premise is very, very simple. We try to capitalize on each candle's momentum and try to get involved in trades early enough with the anticipation that the following candle is going to be in the same direction. Cheers, guys. Bye now.